I want to pick up on a point that Nara left off on, and that's something that's really evident by being where I am right now in the center of London, and that's that people are leaving to the suburbs. Are we starting to witness the death of the central city, of a real estate model where you have that central business district?
Well, there is a very big question mark over the role of CBDs in the current environment. Not only the office workers, but also the retail and the entertainment that those office workers then support. But when you think about the coronavirus timeline, you need to divide it into two. There's the pre-vaccination period and there's a post-vaccination period, hoping, of course, we get a vaccination or very effective treatment. In the pre-vaccination period, it's hard to see how CBDs will return to their former status, given social distancing and bigger cities relying on public transport. They will lag the recovery of smaller cities where you can walk, cycle and drive. But in the post-vaccination period, it is a very different story. Health concerns dissipate quickly. The focus in a recession is on jobs. CBDs typically provide those jobs. And the human capital element that we believe drives productivity over the longer term, where people, businesses, academia, government all come together and form clusters that will prosper. So we believe there are plenty of opportunities for CBDs in the post-vaccination world.
Right, but Simon, with that outlook, you're saying there's a pre- and post-virus vaccination world, but there's a lot of uncertainty when we get it, the effectiveness of it. How do you deal with that uncertainty when you're looking for investments?
What you need is flexibility. It's one of the things we've always said about investments, because you can't predict what the future is going to be. So you need an office space or a business space that is flexible to adapt. It's the right kind of size, you have the right kind of control, and you always focus on the fundamentals. What is the accessibility from public transport or walkability if you're a smaller CBD? What are the amenities around you that businesses will always want their workforce to have? And critically, is it affordable to those businesses? If you have all of those characteristics, then you should be able to endure throughout a cycle, no matter what the unexpected event may be.
Simon, I can't help when you talk about flexible workspaces. I can't help but think of something like a WeWork. Could we see an environment where we have the return of these types of buildings? Is WeWork an attractive type of investment in this new world?
Well, the coronavirus is the first big test for this relatively new trend of co-working. And whilst there's social distancing in place, they are going to find it very difficult. And we've always been very cautious on this relatively new trend. But we believe that flexible working generally is part of a wider flexible revolution that investors and landlords have to adapt to. So businesses want to be able to change their location, change their office style to attract the best workers. There is a war on talent at the moment, war for talent, sorry, and we need to be able to adapt to those. So businesses will want to take on more space during an upcycle, release space during a down cycle. Leases need to be flexible. The one thing that the coronavirus has shown us about flexibility that perhaps wasn't appreciated before is the remote working. So office workers actually working from home. That is going to have an effect on long-term office demand.
Okay, if you have more workers at home, are there any interesting opportunities you see away from the cities? Are there any investments to be made in the suburbs or rural areas?
Well, generally speaking, the residential market, where people will be spending more of their time working from home, is another major opportunity across Europe. Like when you invest in commercial real estate, investing over the longer term because transaction costs are so high. Similarly, people buying their homes, it's a very large cost, and they won't be doing it every 5-10 years. And so there won't be a knee-jerk reaction to moving out of cities simply because of coronavirus. What it has done is accelerated a trend that was already emerging, a preference for quality of life. The affordability of housing in major cities is so low that was also pushing particularly young families to move to suburbs, again with great accessibility links into city centres, but focusing on good quality schools for their children. So suburban rental accommodation or housing for sale is very much an option at the moment. We still, though, believe that urban rental accommodation for those young professionals who, let's face it, into their 30s, late 30s, may not even be able to own a home, they'll prefer to rent and experience what a major city has to offer.
Simon, finally, and quickly here, because we don't have too much time, but we got the Bank of England decision yesterday. There's been talk of negative rates. Yields when it comes to dividend stocks are starting to be cut. What does that do to real estate's attractiveness as a yield play?
Well, real estate is essentially an income asset class, and investors should focus on that. And the lower the bond market yields are, typically the more attractive the real estate market is. That said, if yields are lowered because of a concern over the fundamentals of the economy, then those are the businesses that, of course, pay the rents. So it doesn't work as a one-for-one relationship. But if you have conviction in your location, your asset, and your tenant to pay those rents throughout a difficult period, then that income is extremely attractive.